Wednesday, January 1st, 2020, Maneco 64, home of alternative economics and contrarian views. So I didn't say 2019. You get used for 365 days saying 2019 and then you come on the first day of the year and you screw it up. I didn't. That's good. I'm sure I probably will. I'll probably also get the day of the week wrong in one of my videos. Sometimes I do. Anyway, yes, there's been a lot of people out there, mainstream media, alternative, making forecasts about next year. I've done it myself. In the end of the day, it's just a number. Today is just a normal day, January 1st, 2020. Nothing special, of course. But this morning, I want to talk about definitions. There's an old saying about keeping things simple, that the best things are the simplest things. And I want to talk about economy, the definition of the word economy. I always keep saying I'm the home of alternative economics. But that, in my view as well, is keeping it simple, because nowadays we've got people who get PhDs to become economists. And I think everyone should be an economist. And why do I say that? Well, because the original definition of the word, the Greek meaning of the word is managing your household. And to me, that's all it's about, managing your household, making sure that your incoming resources are more than your outgoing resources, that you were able to save some of your resources for a rainy day. And that applies to everyone. That should apply to governments as well, even though we are told by the PhD economists that governments don't have to do that, that they can run deficits, and that it actually helps the economy. The PhD economists talk about how countries have to run also or accumulate big debts, national debts, in order for the country to be more prosperous. I think it's a load of hogwash. And I think 2019, looking back, the major events in terms of the economy, in terms of the markets, is the fact that we're continuing to go down that path of mismanaging the economy. Whoever in ancient Greece coined the term economy must be like rolling in his or her grave saying, what are these people doing? This is not economy. So for 2019, yeah, it was the year central banks realized that once you go down the path of creating phony credit or fiat money, whatever you want to call it, out of thin air, or inflating the system, that once you do that, unless you pull the plug and restart again, you have to keep going. And that was the most important thing of 2019. We saw the Federal Reserve, of course, cut rates. They started inflating their balance sheet by about $400 billion since the end of August. They're supposed to be normalizing things in 2019, and they didn't, because they found out it wouldn't be that easy. So now they've put us on a path of even more inflation. The other big event, of course, is the repo market. There's something wrong in the repo market. It's not fixed yet. So to me, those are the two most important things in terms of what's going on. Let's look at some of the performances of major assets. We'll look at the stock market, and we'll look at the price of fiat currencies, how they've done against real money, gold. Gold, of course. Why do I say it's real money? Well, because it's been so for 3,500 years. It's the most trusted, stable store of value for the last 3,500 years. So we need to compare our current phony fiat currency standard against gold. So, stock market around the world had a very good year because the Fed, of course, obliged. They've cut rates 3 times. They're inflating again. So the Dow is up 22.24% in 2019, S&P 500 28.7, and Nasdaq Composite 34.6. So I think it was the best year for the stock market since 2013. I saw a headline about that. So let's look at the rest of the world. The Canadian Toronto Stock Exchange up 19%, Brazilian 27%, the German DAX 25%, the FTSE 12%. FTSE underperformed. I think it's probably because the Bank of England actually didn't do anything. They didn't start QE again. They didn't cut rates. Maybe a little bit of the uncertainty about Brexit. So yeah, the FTSE was actually only up 12%. The CAC 40 in Paris or France was up 27.5%. The Italian MIB was up 28. Let's see, the Swiss was up 26%. Even in China, we keep hearing that China is going to collapse, but the Shanghai index was up 23.7. The China A50 was up 40%, and the Dow Jones Shanghai index was up 28.6. Even the Hang Seng, with all the troubles in Hong Kong, was up 12%. So it was a great year for equities all around the world. What about precious metals? Or what about the fiat currencies? Some of you rightly point out that you need to look at gold and silver, not at their price in fiat, but how the fiat currencies are doing against them. I've got something here from Kitco. And I've turned it upside down so people can see that the fiat currencies are actually sinking. I've written about this before I started my YouTube channel. I've talked about it many times in the last few years, how fiat currencies are going to continue to sink against precious metals, against gold especially, because gold, of course, is a true yardstick of value. It has been the best money for 3,500 years, and it hasn't disappointed this year. As you can see here by this chart, all the major currencies, how gold fared. You can see that gold was up, but I turned it upside down, of course, to show you how this is actually the fiat currency sinking. Indian rupee sunk by 21.7%. The euro sunk by 21.16%. Chinese yuan 20.19%. Aussie dollar 19.11%. US dollar 18.63%. Hong Kong dollar just about the same, 17.96. Japanese yen 17.47. Swiss franc, which many consider a safe haven currency, think again, down 16.88%, or gold was up 16.8%. British pound had a fairly good year relative to other fiat currencies, but still sunk by 14.44%. And the Canadian dollar had a great year compared to all the other fiat currencies, but was still down 12.98%. So that's the performance of the fiat currencies against gold. And why is this happening? Well, because gold and silver are not easy to create out of thin air, like fiat currencies or fiat credit, if you want to call it, which is just typed by the central banks into the system when they do their QE, when they inject hundreds of billions into the repo market, and that's not going to stop. Of course, the stock market did very well as well, outperformed gold in some of these currencies. But that's the game. That's what the powers that be want. They want people to stay in their paper game, to put their hard-earned wealth into the paper market, and That's why they keep pushing the stock market. That's why they do everything to keep the stock market up. Don't forget, gold has done really well in spite of all the headwinds it has to face in the fraudulent, manipulated paper market that is the COMEX, the LBMA, and they've got the central bankers behind them, the bullion banks. They lease the metal from the central banks. They rehypothecate it many times over, and they flood the market with paper tons of gold to try to control the price. And in spite of that, gold did well. While in the stock market, actually, it's the other way around. The central bankers do everything to help market participants with their long positions. So I've spoken about in the last week what I think is going to keep happening in 2020, and my views, of course, have not changed. We're going to continue to see more and more pumping of this phony credit, phony money into the system. I do expect the national currencies to keep sinking against gold and silver. I do expect governments to continue to run a bad household. And what does that mean? As I said before, spending more than they bring in. And that's happening everywhere around the world, maybe with a few exceptions. But even the countries that run a good household, they're thinking about running a bad household, like Germany. Even the central bank president there, Jens Weidmann, president of the Bundesbank, he even said a few weeks ago that the German government needs to rethink about running budget surpluses. So I think it's going to get worse in terms of the economy. Of course, these people think that inflating the system, running deficits is actually good for the economy. I say don't buy it. So what is the solution for us, the individual and our families? Well, it's to look at the definition of economy and stick to the real definition of economy, which is running a proper household, running your finances properly. And I think if you do that, you can ignore all the noise around you, all the suggestions by the experts. And I'm not saying I'm an expert, but I'm looking at what economy really means. And in the end of the day, if we can all run proper households, the reward we will get is peace of mind. And I think it was Richard Russell, who died a few years ago, who said that for him, and he wrote a stock market newsletter, but for him, he said the most important thing to have, most important commodity, so to speak, to have was peace of mind. And I think that's really good advice from Richard Russell. And it doesn't matter what year it is, 2019, 2020. I think we have to strive for that no matter what year or what day. So if you enjoyed this video, please hit the like button. If you haven't subscribed to the channel yet, think about subscribing. Please share this video far and wide. You can also follow me on Twitter, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.